Hello fellow investors, and welcome to my P2P portfolio update detailing my income from January to September 2025. You probably noticed the big gap in my videos. In fact, I've recently become a father, which meant I had to step back from posting for a while. To bridge that gap, I've combined my updates into this single video, covering everything from January to September. In this video, I'll walk you through my portfolio's performance, discuss the two major milestones I achieved, and explain the key changes I made during these months. There have been some noteworthy shifts and achievements that I'm excited to share with you. As you watch, let me know in the comments if you've experienced similar changes in your investments this year or if you have any questions about my portfolio decisions. I'm always keen to hear your thoughts and learn about your experiences, so don't hesitate to join the conversation. For now, lean back and enjoy the video. My portfolio remained relatively stable between January and April and there were no major changes. The portfolio size hovered around 98,000 and I was only redistributing the uninvested funds. This is reflected in the income which ranged from about €700 to €950. This is a considerable increase compared to the same period of 2024 which saw the income range from €525 to about €670. The difference becomes even more apparent when compared to 2023 when the income was between €280 to €370. In May 2025, I decided to allocate funds to Bondora, primarily to capitalize on their promotion. Normally, I'm very reserved when it comes to Bondora due to the low interest, however I had funds sitting around and limited time and energy to deploy the capital, so making a transfer to Bondora was the best option. At the same time, I was re-evaluating my position with RoboCash. The suspension of Digito's license, combined with RoboCash's progressively declining interest rates, dropping from 12% to 10.5% over the past year, convinced me to exit. Regulatory uncertainty and falling yields posed too much risk for the return offered. I managed to withdraw most of my funds smoothly between May and July, with the remainder following by September, and was pleased with the efficiency of the withdrawal process. May was also a milestone month as I surpassed the €100,000 mark in P2P credit investments for the first time. My portfolio grew steadily, reaching over €101,000 in May and exceeding €103,000 by July. At the end of July, I introduced Estate to my portfolio. While Estate is a newer platform lacking an extensive track record, meaning it hasn't yet demonstrated consistent long-term returns or resilience through multiple market cycles, it offers several promising features. Notably, it provides access to property-backed loans with transparent reporting and a relatively high projected yield, up to 15%. The key risks here are its short operating history and the potential for operational teething problems, which are not uncommon with young platforms. That said, I view Estate as a calculated diversification play. It allows me to tap into a different asset class and potentially boost returns, while I remain vigilant and limit my exposure until the platform builds a more substantial track record. August was notable for the addition of two new platforms, Nectaro and Afranga, to my portfolio, both of which are regulated and have earned considerable trust among investors. With my new life slowly falling into a groove, I had additional time to terminate my low-yield investment on Bondora's and reallocate those funds to Afranga and Nectaro, aiming for stronger returns. I will now follow with a closer examination of the income in September. My investment on Income Marketplace currently stands at €7,554 and has generated €76 in interest, with my funds fully allocated across all loan originators. Over the coming months, I intend to restrict my investments to lenders that demonstrate strong financial stability and a consistent history of timely repayments, prioritizing the minimization of risk even if it means accepting slightly lower yields. Factors such as a lender's risk profile, yield, track record, and transparency all play a part in shaping my strategy. Turning to the lenders, Huvi recently published its 2024 financial results, which revealed notable increases in both net profit and the overall size of its lending portfolio, signs of robust growth and operational soundness. Nevertheless, I have opted not to invest in Huvi at this stage, as their comparatively modest yield of up to 9% does not align with my current performance targets. As part of my ongoing portfolio management, I am steadily liquidating my land account in line with my strategy. This decision follows concerns over Lande's protracted recovery efforts with delinquent borrowers. At present, my account balance stands at €1,727, with €3 in interest earned. The portfolio statistics are as follows: 6 loans delayed by more than 60 days and 25 loans currently in default. While I remain concerned about Lande's slow debt collection process, I am still confident that I will not lose any capital. This confidence is grounded in Lande's established track record of ultimately recovering funds through the sale of collateral assets, even though these proceedings can be lengthy. Historically, Lande has managed to return principal to investors in most default cases, albeit with minimal returns once collection costs and delays are factored in. Consequently, I expect the return on investment to be negligible, as the drawn-out recovery process erodes potential profits. For example, in several instances, the collateral securing the loans, such as machinery, has proven difficult to locate, which results in further procedural delays. When this happens, the bailiff must arrange additional visits to identify and seize the assets, each step incurring extra costs. Ultimately, these expenses are deducted from the proceeds of the collateral sale, reducing the final amount distributed to investors. This highlights the importance of closely monitoring collateral quality and reinforces my decision to exit Lande. My Fintown account sits on €7,507. The investment generated €54 of interest. With consistent interest payments and no delays or defaults to date, I am inclined to retain my exposure on Fintown for the foreseeable future. The platform's strong performance has reinforced my confidence in its operational model, and for now, I see no reason to adjust my allocation. My Crowdpear investment now stands at €922. Despite scaling back, it still generated €14 in returns. Don't forget that most of the payments are done quarterly. I decided to terminate my investment on Crowdpear due to limited investment opportunities. Although my position on Crowdpear has been reduced and will soon be closed, I am satisfied with the platform's performance thus far, particularly given the consistent quarterly payments and absence of major issues. As I reallocate funds from Crowdpear, I am focusing on platforms with broader investment opportunities and more regular cash flow, which aligns with my evolving portfolio strategy. I am gradually winding down my EstateGuru portfolio, which at present holds €2,844 and has generated €4 in interest. Currently, around 90% of my funds are locked in defaulted loans, the majority originating from Germany. In September, I received proceeds from the repayment of a defaulted German loan. I had invested €50 in loan number 8005 Bridge Loan, Germany, and, after more than 3 years, finally received €28.93. This outcome serves as a clear indication of what may lie ahead and stands as a cautionary tale for all investors. Even when a loan appears secure, with a low loan-to-value ratio, things can still go awry, and capital may be lost. Therefore, always carefully evaluate the risks before investing. Reflecting on this experience, I have learned that even seemingly secure investments can result in losses, so it's crucial to diversify and not rely solely on platform assurances. InRento is the opposite of EstateGuru and all my loans are performing well. My €12,347 investment on InRento generated €77 in interest without delays and defaults. The platform normally pays lower interest rates, however, with the capital gains and other payouts my net annual return, as reported by the platform, reached 12.01%. The graphs also nicely show the increasing total profit and net monthly profit. My ViaInvest position is now worth €17,576 and has generated €178 in interest. ViaInvest remains one of the anchors of my portfolio. For comparison, investments on other platforms have seen interest rates drop over the past years, while ViaInvest has consistently offered up to 13%. This stability in return stands out in a market where many competitors have been steadily lowering their rates, reinforcing ViaInvest's role as a reliable component of my investment strategy. My PeerBerry account is worth €15,750 and has generated €120 in interest. However, I continue to experience ongoing issues with the auto-invest function, which struggles to deploy all available funds efficiently, necessitating manual intervention on my part. For instance, last month I had to manually select and invest in individual loans because the auto-invest feature left a significant portion of my funds idle for over a week, and even that was not a guarantee for deploying the funds. The platform's interest rates are also on a downward trend. Most recently, PeerBerry introduced a new loan originator, Aventus Business from Poland, offering business loans with a 7% annual return. In addition, loans from South Africa and Nigeria are available at a 7.5% and 9% annual return. I am particularly wary of these options. Given the economic and regulatory environments in South Africa and Nigeria, as well as the relative newness of Aventus Business, I believe a higher interest rate would be necessary to compensate for potential risks. In my view, the current rates do not adequately reflect these underlying risks, which is why I have chosen to avoid such loans. To summarize, while PeerBerry does offer some attractive features, the persistent problems with fund deployment and the continuously dropping interest rates make me cautious about increasing my investment until meaningful improvements are made. Esketit remains my largest position, currently valued at €21,521 and having generated €213 in interest. Esketit has recently introduced a loyalty program with two tiers, the first at €25,000, offering an additional 0.5% interest, and the second at €50,000, granting an extra 1%. This means that if I were to increase my investment to €25,000, I would receive an additional 0.5% interest on eligible loans, potentially boosting my overall returns. However, since the bonus interest applies exclusively to Spanda, Mojo, and MDI finance loans, the actual impact on my returns depends on my portfolio allocation. This limitation is important to consider when evaluating the potential benefits of the loyalty program within the context of my investment strategy. I invested €7,000 on Estate, but due to generous cashback bonuses and the reinvestment of interest, this amount rose to €7,500. The investment generated €120 in September. Estate is currently developing Astor's Village in the Adatsi district of Latvia. As one of the newest additions to my investment portfolio, this platform represents a notable departure from my usual strategy of selecting platforms with a lengthy and established track record. I chose to invest in Estate to diversify my portfolio and explore emerging opportunities within the property investment sector, even though it meant stepping outside my standard selection criteria. Despite Estate's relatively short operating history, I was particularly attracted to its secured loan structure and the feature of daily interest payouts. To mitigate potential risks, I conducted additional research into the company's background and reviewed its project pipeline to ensure a more informed investment decision. The loans are secured, and the interest is paid out daily, with rates reaching up to 15%. While Stick Credit has operated since 2013, its investment platform Afranga was launched in 2021 and became officially regulated in 2024. In 2025, the platform further expanded its credit offerings by incorporating additional lenders, including Lendivo, Swiss Funds, and CreDirect. The core team comprises COO Janko Chuklov, Head of Marketing Ivalo Yavkov, and Head of Customer Support Maria Mativa. I invested primarily in Stick Credit loans offering yields between 11% and 16%, with terms ranging from 11 to 34 months. Notably, the 16% loans were part of a promotional campaign and are no longer available. As of September 2025, my Afranga holding was €5,591, which has generated €48 in interest over the past month, aligning with my expectations for this type of investment. Nectaro is also a newcomer in my portfolio. It is a regulated P2P marketplace with a seat in Latvia. Although the platform exists only since 2023, its mother company the Dinino Group exists already since 2004. Nectaro's affiliation with the Dinino Group provides an added layer of credibility that is reassuring for investors seeking stability in the P2P sector. I intend to closely observe its performance over the coming months, particularly in terms of loan quality and payment punctuality, as I continue to diversify and optimize my portfolio's risk-return profile. My investment of €5,644 generated a total income of €136, which consists of approximately €85 in cashback rewards and around €51 in interest. For simplicity, I present these figures together, as combining them provides a straightforward overview of total earnings, though it's important to note that cashback and interest are distinct types of income. From January to September 2025, my P2P investment journey has been marked by both stability and significant strategic shifts. Early in the year, my portfolio remained steady, but as the months progressed, I made several key adjustments in response to changing market conditions, platform developments, and my own evolving risk tolerance. I diversified across a range of platforms, each with its own strengths and challenges. Platforms like ViaInvest, Esketit, InRento, Fintown, Income Marketplace and PeerBerry have proven to be reliable anchors, consistently delivering stable returns. In contrast, platforms such as Lande and EstateGuru have highlighted the risks associated with slow recoveries and defaulted loans, prompting me to gradually exit these positions. Newer additions like EstateGuru, Nectaro, and Afranga represent my willingness to explore emerging opportunities, though I remain cautious and limit exposure until these platforms establish a stronger track record. Throughout this period, I prioritized minimizing risk by reallocating funds from underperforming or higher-risk platforms to those with better regulation, transparency, and investor trust. I also took advantage of promotional offers and cashback campaigns where appropriate, boosting my overall returns. Despite some setbacks, such as cash drag, delayed payments, and declining interest rates on certain platforms, my portfolio has continued to grow, surpassing key milestones like the €100,000 mark in invested funds. The experience has reinforced the importance of diversification, ongoing due diligence, and adaptability in the ever-changing P2P lending landscape. For the month of September, my total income exceeded €1,050, a new milestone and my highest monthly income to date. This figure not only surpasses my previous record of €950 achieved in March of 2025. While this achievement is a testament to the progress I've made in my investment journey, it's worth noting that the number was considerably inflated by generous cashback campaigns from platforms such as Esketit, Afranga, and Nectaro. Nonetheless, it serves as an encouraging benchmark as I continue to track my progress and set goals for future growth. Looking ahead, I will continue to monitor platform performance closely, especially among the newer entrants, and adjust my strategy as needed to optimize returns while safeguarding capital. My focus remains on platforms with strong financials, transparent operations, and a proven ability to manage risk effectively. Thank you for following my investment journey. I encourage you to share your own experiences and insights, as learning from each other is invaluable in navigating the complexities of P2P investing. Remember, always invest responsibly and never risk more than you can afford to lose.